Hey everyone, it's Julie here with TipRanks, and today we're taking a look at two stocks that have over a dozen unanimous buy ratings each. So let's get into it. Alright guys, welcome back. Thank you all so much for being here and happy Friday. Today we're taking a look at two companies that have unanimous strong buy ratings from over a dozen Wall Street analysts. And recently we've also seen some of those analysts increase their price targets. So today we're going to take a look at these two companies, what it is that they do, and what those analysts are predicting for the stock's future. You can follow along over on the TipRanks website or by downloading the TipRanks mobile app. You can do so by scanning the QR code on your screen or by following links in the description down below. Just before we get into today's unanimous strong buy stocks, this is a reminder that if you enjoyed the video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's jump right into today's stocks. First up, we're taking a look at Permian Resources. They trade under the ticker PR, currently priced at $15.59. We have talked about this stock before, most recently around the start of November. Overall, in the past year, the stock has gained 23%, and in the last 3 months is up 11.6%. They do score a 9 out of 10 on the TipRanks Smart Score, with increased hedge fund activity and very positive crowd wisdom. Permian Resources is an oil and natural gas company with operations focused in the Permian Basin. They are focused on the acquisition, optimization, and development of oil and natural gas properties, with specific assets in the core of the Delaware Basin. This includes over 450,000 net leasehold acres and about 94,900 net royalty acres across the Permian Basin, particularly in New Mexico and Texas. On November 6th, Permian Resources shared their Q3 earnings report, where both their earnings and revenue came out ahead of analyst expectations. They reported Q3 earnings per share of 53 cents, which beat analyst expectations by 21 cents per share, and their revenue of $1.22 billion beat estimates by $10 million and grew over 60% year over year. Along with those strong results, the company also increased their full-year guidance. They noted that their Q3 oil production exceeded expectations at 161,000 barrels per day. They raised their full-year oil guidance by 11,000 barrels compared to the initial guidance back in February. During the quarter, they also increased their base dividend by 150% annually, and their buyback authorization was raised from $500 million to $1 billion. Just yesterday, an analyst from Raymond James increased their price target on the stock when they reiterated their buy rating. When looking at this group of stocks, they noted that the fourth quarter was forgettable from a stock performance perspective, but they set the exploration and production group up nicely for going into the new year. They expect largely inline results from their coverage and note that efficiency gains continued at a pace that almost nobody anticipated. Production growth is largely not the goal and looks like a byproduct of these efficiency gains, and they expect acquisitions to continue. The day before, we also saw an analyst at Morgan Stanley bump up their price target on the stock. Permian Resources has 14 current analyst ratings, all weighing in with a buy. And their average price target of $18.71 implies an upside potential of over 20%. Looking at those ratings down below, we can see several bumping up those price targets. Our high end at $23 with an upside of 48%, while our low end comes in at $17 for an upside of 9.4%. And for our second unanimous strong buy stock, we're looking at Live Nation Entertainment. They trade under the ticker LYV, currently priced at $139 per share. This is another one we have talked about recently. Back in May, over the past year, the stock has gained 56%, and in the last 3 months has climbed nearly 20%. They currently score a 10 out of 10 on the TipRanks Smart Score, with bullish blogger sentiment and increased hedge fund activity. Live Nation is a global leader in live entertainment. Live Nation is the world's largest producer of live music concerts, promoting, producing, and operating live music events in their owned or operated venues. They also operate Ticketmaster, one of the largest ticketing platforms globally, selling tickets for live events across various categories like music, sports, theater, and family events. Through their Artist Nation segment, they also manage the careers of artists, offering services like tour management, branding, and strategic partnerships. Live Nation did share mixed results for their third quarter back on November 11th, where they came out with an earnings beat but a miss on revenue. They reported earnings per share of $1.66, beating expectations by 5 cents per share, while their revenue of $7.7 billion did miss by $110 million, but grew nearly 37% year over year. They said they wrapped up their most active summer concert season ever, and that the show pipeline has never been bigger and brand sponsorships are accelerating. Their Ticketmaster sales were up 15% year over year, and concerts were up 23% for October. They're going to be bringing 14 more venues online by the end of 2025, accounting for about 8 million incremental fans. In December, we saw an analyst from Roth MKM increase their price target on the stock. They said that strong secular trends, fueled by greater global accessibility to music, more consumers buying tickets, and an expanding number of touring artists, should allow Live Nation to sustain a multi-year, double-digit operating income growth outlook. They added that 2025 will see an acceleration in stadium shows and the continued expansion of Venue Nation. And just before them, another analyst at JP Morgan bumped up their price target as well. Live Nation has 15 current analyst ratings, all rating the stock a buy. And the average price target comes in at $150, implying an upside potential of about 8%. Looking at those ratings down below, you can see a handful of analysts bumping up those price targets. Our low end is a buy rating back in November with a slight downside of 4.5%, while our high end price target is a bit more recent here from Citi at $163 for an upside of over 17%. So that is a quick look at two stocks with over a dozen unanimous buy ratings from Wall Street. Let me know your thoughts on these companies in the comments down below. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always stick with your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.